Investors don't need to choose between growth and income. Here are 5 of the fastest growing dividend stocks available today. Nike, driven by its iconic sports brand, has been able to grow revenue per share, earnings per share, and dividends per share at above 10% a year for the last decade. And it's poised for continued double-digit earnings growth. However, investors should wait for its price-to-earnings ratio to fall to a historically normal level before entering a position. Over the last decade, Grainger has grown its revenues per share, dividends per share, and earnings per share by a double-digit compound growth rate over the last decade. And at a price-to-earnings ratio in line with its historical average, Grainger does not appear to be overvalued here. Driven by the rise in health insurance demand, United Health Group has grown revenue per share at 16.8% a year and earnings per share at 9.6% a year over the last decade. During the next several years, United Health's total return should be somewhere between 10.5% and 12.5% a year from earnings per share growth of 9 to 11% and dividends of 1.5%. The company appears to be trading around fair value at this time. Ecolab has increased its dividend payments each year since 1985. The company's double-digit growth rate may drop into the single digits while oil prices remain low, but over the long run, Ecolab's growth prospects appear very bright. The stock has fallen over the last 6 months, putting its price-to-earnings ratio in line with historical levels. Disney's strong entertainment brands have driven significant growth for the company over the last decade. Earnings per share have a compound annual growth rate of 14.3% over the last decade, while dividends per share have a compound annual growth rate of 15.2% over the same period. However, investors should likely wait for its price-to-earnings ratio of 22.2 to fall into its normal range of between 15 and 20 before buying. In New York, I'm Brittany Humar for The Street.